Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. In this video, I will be speaking about AUDUSD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing and how they're moving their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. If you're new to the channel, make sure to subscribe. This is the place to be for high quality free trading education. Now, without further ado, let's jump straight onto the charts. Starting here from the monthly time frame, what we can see is that we have a market which at the moment is testing a quite strong monthly support and demand area. From here, in fact, all this previous move to the upside was created. Again, here, the market tested its zone and started rejecting it to the upside. And if we look closely at what kind of pattern the market is creating here, we can notice how we have an inverted head and shoulders because we have a move lower, correction, lower low, equal high, correction again, and from here the next leg is supposed to be, from a pattern perspective, a push higher, completing this inverted head and shoulders. And we can see this pattern easily also here. I can go ahead and draw it for you if you're still not seeing it. We can notice how this is the move lower, exactly from this high. We have the push lower, move higher, lower low, equal high, correction, and from here we're supposed to see the push higher, completing this inverted head and shoulders. So the monthly time frame as well looks quite bullish. Now let's drop that on the weekly time frame and see what we have. From a weekly perspective, we can notice how now the market has just broken back above a quite important structure level. This zone was acting as previous support here. The market then broke it to the downside, now broke back above. So this previous support is now again acting as support. And if we look closely, we can see how this wick already retested it after the market broke it to the upside, because what we know is that when the market is creating a fake breakout, so let's say we have a horizontal level of structure and the market is respecting it multiple times, then we have the break below that zone, break back above. At that point, this is when the market breaks back above, you have a confirmed fake breakout. At that point, you would expect a test of the level and the rejection to the upside, which is in fact exactly what just happened here, because this level was in fact acting as support on multiple occasions, break below, break back above, retest, and now the market is rejecting to the upside. So the weekly time frame at the moment seems quite bullish. Now let's drop down on the daily time frame and see what we have. Well, from a daily perspective, the situation is quite clear. We can notice, in fact, how first we had the creation of this W formation. And in fact, I did make a full breakdown explaining all the reasons for which from here we could expect this rejection to the downside, which is in fact exactly what the market just did in my previous analysis. And by the way, I will link it in the description so you can go and check it out for more free education. However, at the moment, what we can notice is that the market, after creating the push lower, has also created a continuation to the upside, which again, I had explained how we could expect also this push higher after the move to the downside in my previous video, which, as I just said, is linked in the description for more free education. But now that the market has created these two moves that you would usually expect in a situation like this, what is next? Where is the next structure for this market? Now, before we go more in detail into the technicals here from a daily perspective, first, let's go and see what we have when it comes to the commitment of traders. So what the big players, hedge funds, are doing in the market. Now, if we're looking at the data for the AUD, actually already we're looking at AUDUSD because all currencies on the spot are traded against the USD. And what we can see is that with the last reports, net positions have been massively increasing. We went, in fact, from having minus 107.5k net positions all the way up to minus 83.2k net positions. So we had a massive increase of the net positions, with institutions moving back to the bullish side for AUDUSD. In fact, we can notice how institutions increased their longs from 30.5k up to 41.2k and decreased their shorts from 145k to 124k. And keep in mind that all currencies on the spot are traded against the USD. So if we look at AUD, actually already we're looking at AUD-USD. So clearly institutions are longing this pair. Now let's keep that in mind and move back to the technical side of the market. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find here on the screen and also linked in the description, so you never miss new updates. Now back to the analysis. As I was saying, from a daily perspective, the market is now pushing to the upside and has just broken yet another quite important level. In fact, this zone was acting as previous daily resistance here, again acting as resistance here. Now the market has broken it to the upside. So all this previous resistance is now turned support at this level. So if the market will now go and retest this zone, what we could expect is to see even more institutional longing inside of this area, further increasing the probabilities of a potential push higher away from the zone, because actually this is a confluence of support level, because we have both the previous resistance turned support and also the Fibonacci levels lining up in this area. Now, why do I say Fibonacci levels? Because since we have an impulse, if we want to measure the correction, we have to take our Fibonacci from the low to the high of the impulse leg, and this shows us how we have the 0.32 and 50% retracements lining up exactly inside of this previous level of horizontal resistance turned support, therefore creating a confluence of support. And in a confluence of support zone, you have higher probabilities of getting even more institutional longing. So if the market will correct to this area, what would I expect in a situation like this? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily time frames combined with the COT data, those are the best time frames when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best time frames for that are the intraday time frames, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to bullish market at that point, I wouldn't be surprised to see a potential push higher, completing this daily impulse correction and impulse pattern to the upside. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked both in description and on the main page of my YouTube channel. Here, you have the possibility to gain access to the most complete, all-inclusive mentorship program that I have created for you. As soon as you open the website, you will see this video breaking down everything included in the mentorship program. And in the program, you have the possibility to gain access to all my courses and also to the software, so the COT data software, which is exactly the one that we used in this analysis, the trading station software with Telegram signals integration, which puts together everything that you need as a trader all in one interface. You also have the possibility to gain access to one-on-one private mentoring directly with me, so you will have my personal contact. And if you continue to scroll down on the website, you will see that directly from the website, you will have the possibility to register and gain automatically access with the email and password that you will create during the registration process. So at least I suggest that you go and check it out right now. The link is both in description and in the main page of my YouTube channel, and I will see you in it. If you enjoyed the video, make sure to drop a like and also let me know in the comments below any new pairs or topics that you would like me to cover in the next videos. And I will see you in my next breakdown.